Uh, Dear FDP participants, a very warm welcome to you on the last day. Today we have industry representatives joining us, and we are kindly welcoming Mr. Rohit Soni. Mr. Rohit Soni is a decisive, strategic, and performance-driven industry professional targeting assignments in program management, digital transformation, and consulting. Currently, he is consultant in Digital Strategy and Innovation, ANB, Riyadh, Saudi Arabia. He has been Digital Transformation Manager at the Bank of New York Mellon and former advisor and consultants, Ernst& Young India. He has provided his advisory services to many clients related to open banking, fintech, digital finance, and digital strategy. We welcome you, Rohit, for your kind presentation. Should I share the presentation?
Sure. Yeah, I hope my headphones fine, right? You can hear me.
Yeah, your headphone is fine,
Okay.
Rohit.
Okay.
Are you able to see the presentation, Rohit?
Yes, I can see. Yes, I can see. So let me start from here. So good morning, everyone. Thank you for joining today. So this session is about how AI is actually being used in financial service sector, and that's the topic I got. Uh, I'm not going to talk about the generative AI and the LLMs which you guys are using day to day, or the chatbots, which is history now. My focus is going to be more on the decision making systems, right? So how the banks, financial institutions, right, and mostly I'm going to talk about the retail banking space. I'll take some bit of corporate and investment banking also, but the majority of the use case which has been adopted in AI is mostly in the retail banking space. So I'll talk about that. And I will also maybe give an example about the new age fintech, some of the incumbent bank, what they're doing. Few examples for the Indian bank, few examples for the global bank, right? So you get a pretty good mix of what's happening in the AI in the overall landscape of the banking financial services. Okay. So how I'm going to structure this 90 minutes is, so first I'll give you some clarity about the AI, right? The buzzword we all are hearing day in, day out, and how it's actually been. So my focus is going to be more specific to financial services. Maybe a few example I'll give, which is cross industry, cross function, but majority of the example is going to be more on the FS side. I'll also going to talk about the AI, how it's going to delivering the ROI, because when you're looking at the corporate side, right, I'm not going to give an example on the NGOs and the industry, right, or the governments, right. It's mostly specific to corporate. One of the important business metrics is the ROI, right? What is the return? So I'll also gonna talk about the efficiency measures and where the return on the investment gonna be achieved based on the budgets we are preparing on the AI. I'll also gonna talk about the few constraints and where the AI is not doing very well right now, which is more of a, I'll say, still a case study based discussion than a actual world implementation. I'll also gonna touch base on the what, right, the way it's going up and how it's been adopted, right? But at least for this year we have some sort of visibility. I'll talk about it. I'll quick I give you a quick brief about my previous experience also, so you got some sort of this, right? So I was part of industry as well as part of consulting world. Either directly, indirectly, I worked with MBBs and Big Fours. When I'm talking about the industry, I worked with large-scale bank like HSBC, BNY, and all. So I have both sort of knowledge and experience, right? So I have understanding from how a consultant thinks. I also have some understanding of how actually the large-scale bank think about AI and how they are adopting it, right? So it's going to be a more of practitioner view. It's not going to be a pitch. Okay, so that's going to be the overall tune for my next 90 minutes. Next slide, please. Can I have the next slide? Okay, yeah. So this is the structure I'll gonna talk about. So first, we're gonna go more of a ground, ground level understanding of AI matters. Second, and multiple use cases, right? Then we will deep dive on the core fintech part. If you look at the overall banking space, right? across the actual adoption we have seen, that's in three key parts. Of course, it's throughout the landscape, but where I'll see the big ROI is credit. Credit is nothing but when you are actually, you lend, right? When you are giving money to someone else, how to understand. So there are two things we think, right? We normally measure while we are giving lend. We give money to anyone. It can be a secured, unsecured lending. That's one is the person is capable enough to pay it back, and second is the person is willing to pay it back, right? So willingness is also important. You have seen a lot of frauds in India, right, where the person is already a multi-billionaire, millionaire, but they are not paying back to the banks, right? So that's the problem, the willingness of paying back. Second is about the credit worth, your capability of paying back. I can take a huge loan, but maybe I'm not capable to pay it back, right? So these two things, two measures normally we look at while we are lending to anyone. And the AI is understanding these two behavioral sentiments very well. And the models which AI is generating for credit underwriting are quite close to helping all the banks and financial institutions to give credit to the those people who are uh, based on the bureau scores, they are not credit worthy, but still they are someone who can take the credit and pay it back, right? So that's one thing. Second is another key use cases on the fraud side, right? Multiple types of fraud, right? I'll say mostly specific digital, right? This non-digital fraud is also part of AI, but digital is something which I'll say is helping a lot, and it's maturing at a very very fast speed. Okay, I'll give you an actual example, right? And this happened to me 2 days before. I had a very long day. I was, I was pulled down in multiple things. And what happened later part of the day, I got a message, right? That's on the traffic challan. I was overseas, but I have got traffic challan of India. That's an even for a month back traffic challan, and it's a $500, right? 500 rupees. So I thought of let's pay it immediately. I don't want to get into all this thing. So I got a message, right? I click on the link. It's showing the page as it is of the Mumbai traffic authority. I When I looked at the payment mode, right, it's showing only the card transaction. It's talking about debit card and credit card. I was a little worried. Why is because in India we have a strong UPI landscape. There's also methods of paying through net banking and other ways, right? The digital wallets and all. So first of all, I got triggered. Why it's happening? But even I understand banking. I was in such a hurry, and I thought it's just a $500. Let me pay it fast and leave. Maybe it's because government is going through some sort of transformation. That's why they don't have the other ways of payment. I tap on the transaction, and I tap on transaction. I filled in my credit card details. I received the OTP, and these days OTPs are so sensitive that immediately you put in the OTP, and then the transaction got happen, right? So I immediately put the OTPs. Now, see, the difference is that what happened, once I put the OTP, if it would have been normal transaction, it would have been passed through. But what happened is, just give me a second. Yeah. So then what happened is that transaction didn't pass through very far. I mean, so yeah. So the first level of verification, that's on the OTP. I put in the OTP and I submitted. But just because of a very strong backend fraud system, that payment didn't pass through, and they asking for my date of birth. And there I got triggered, right? Why it's asking for a second level of verification? Then I put my date of birth, but I didn't submit it, right? I thought of let me look at the message I got on the OTP. When I look at message of OTP, it was actually international transaction, some I think 3,500 Saudi Riyal, which is converting close to almost 50,000-60,000 rupees. I immediately stopped it. Now see that how this overall AI enabled digital layer supported me to have a fake transaction, and it saved my almost $56,000, right? How it Because they understand it's an international transaction. This user is not doing he's using his Indian credit card for international transaction. Why it happened? Maybe it's a one-off thing. Let me have a second level of verification of the customer before actually process transaction, right? So this is how the systems are, right? They're very intelligent. Earlier what used to happen is all these systems are very rule based, right? So if I'll put in a rule in the back end of the system then pass on a transaction. It will not look at intelligence, but now the system has intelligence, right? Wherever they see any anomaly, wherever they see any sort of outlier, they immediately trigger it, right? So, and this is a case of mine, right? I mean, I'm honest, right? I'm not making this up. So this is how good the systems are, right? This example of fraud. Same for trading. I'll go through these use cases, one by one in the subsequent slide. You got more detail about what it is. But here, what I'm saying is that how AI is enabling the trading also. So if you look at trades, right, this is a less intelligence work and more speed work. They're also, AI is doing extremely well, because they can immediately, look at the financials of any of the corporate, much faster than any individual. They can pull in information what's happening around the world. So real life data of the news is there with the system. It'll immediately buy and sell, right? The time a trader will take to, punch in any trade of buying and selling, maybe a half of the time or less than that, right? AI algorithmic, a trading tool gonna execute the transaction so fast as this, right? And that's the reason you have seen a lot of reports from NSE and BSE in India, which says that 90-95% of the options traders are not making money. So the reason is just because it's very tough to fight with AI, at least for the speed. And right now, as the majority of for the speed, right, and accuracy. Maybe for when I'm talking about high critical intelligence, still, if you really want to make a long-term portfolio, you have to go to a portfolio manager than an AI engine. We are not that close to the reality, but maybe in the next few years, or maybe in the next 3 to 5 years, we don't even need strong portfolio managers. AI going to do the work for us. This is how it's going to be supporting trading as well as for wealth, right? So in wealth, when you go to the wealth, we'll talk about how we're going to create the portfolios through AI and all, and which engines and which model we use. Okay, that's going to be part of market landscape and all. Then we will also talk about the enterprise digital transformation, right? So digital transformation, if you look at it, right, everyone has their own definition about it. A lot of people say that, if I have mobile app and website, that's a digital transformation for me, but it is much more than that, right? So if you talk to me what digital transformation is, I'll say that, the front office of the business, middle office of the business, and back office of the business, right? When you are transforming all three, that's called actual digital transformation. So I mean, the front office is your digital channels, middle office is your entire workflow system, how the middle office perform, your risk and compliance. And the back office is actually, when you are executing the operation work, right? And there are different there are different digital utilities of transforming the entire landscape of a business. But we will go on touch base mostly on the AI part, right? Where AI, different ML model going to support us in transforming the overall enterprise level digital transformation. Okay, I'll not going to go very deep and technical. I'll make it and keep it more of business relevant for you guys so that you understand, and maybe in future you can also apply that in your functional areas. Okay. I think we can move to next slide. Yeah. Okay. So we are seeing here, right? How big is the overall fintech slash banking? This more specific. When I'm talking about fintech market space, I don't think of fintech as just the financial technology companies. Even I think a lot of banks which have their own digital channel and which is a sort of spin-off or a standalone utility that's also come a part of this $30 billion opportunity, right? So that's what this big the market is. But I'm sure, right, if you look at the overall global market, right, which is in trillions of dollars typically on the banking financial side, we are maybe 5 or 7 years down the line. This is going to be a $1 trillion economy, right? Specifically, only I'll say fintech specific or AI driven, decision making for the financial sectors, right? So what we're going to do here is on the slide is that we'll say that okay, so I'll specific now talk about what is core definition of AI, right? The verbatim, you can read it here. For me, AI is something which is learning continuously. Okay, fine, that's the difference between a normal automation than a AI. Second is it something which operates in maybe not in seconds, in milliseconds, right? So the actual execution is happening a lot much faster than an individual or even a rule-based platform does. Decisions forecasting is always data driven and problem is and probabilistic. So the decisioning, what AI does is, based on the lots and lots of data sets and data parameters what they get, and it's based on the hardcore mathematics. It's not going to be based on any sort of guesswork. And another important thing about the modern AI is that it improves with feedback loop, right? That's very, very important, I'm telling you. So what's happening is that, if suppose in bank or or in a fintech, right, someone is building a model, a AI model, and they want to use for some specific use case, we can't deploy this model, or we can't launch it until unless we'll see that it should be at least as far of the how humans are giving the output. And this can only achieve once you have a lot of feedback. So the moment first you're going to have a data, you'll build the model, you test it, right? Maybe you have accuracy of maybe, let's say, 70%. Then you see what are the reason we have a 70% accuracy, what are the reason of the exceptions, anomalies, right? Those 30% will go deep, will see that what is the reason, and we feed in the data which is more specific to those reasons, so that we're going to have improve the efficiency. So first of all, you build the model. Second is you improve the efficiency, right? These are four, I'll say, very a concise or summarized way of talking about what AI is, right? According to me, right? Otherwise, you have a big definition of what AI is. Another example I'll give quickly, right? And that's how the AI is shaping, right? So academically, I think AI has been last, I think, 10, 15 years. Even when I was in MBA, doing MBA, right, I heard about AI, how AI, what AI can does. But it was always on papers. But in last 5, 6 years, okay, in my professional life, I've seen a lot of AI use cases and maturing very fast, right? Even in fact, in last 2 years, since the adoption of large language models, I've seen has been rapidly picking up by all the financial institutes, right? Well, India is still doing it, right? But if you talk from the west to east, typically the whole American economy, the European part, right? They implementing, executing it much faster than anywhere else, right? So, and in India also, we will seeing that this is gonna be the trend in future, but it'll still take some time because of the problem of the technology debt and the complex architecture we have in the Indian banking system. So yeah, so that's what it is. Again, maybe I'll complete this slide with another example, right, to make you understand how AI is different than automation, right? Because that's something everyone's talking about. So when actually I was talking, or we are doing a consulting use cases in, let's say, 5, 6 years back, right? We still thought that we will gonna build some sort of rules, and then we ingest the data in this rule and then build a model, right? That's what we are thinking is, right? And that's how, what the supervised learning they call it, right? But the problem with that is, so let's example, right? So normally in typically talk about Indian banking, what used to happen is that if a person is doing a transaction, let's say, of more than 50,000 rupees at a branch, it triggers a flag. It goes to his team, and then the team do the evaluation. But and this used to happen, right? And because of this, like, a lot of capacity of the bank is going in just reviewing these transactions. But later on, when the AI has been integrated here, what AI says is that we are not just blindly flagging any transaction which is more than 50,000 rupees. We will see the customer profile also. So suppose it's a merchant, right, or is a affluent customer, and 50,000 rupees is very small amount for him, and that's very normal and regular transaction. So the AI says that for, if I look at the past trend of a year or 2 year, 50,000 is not actually a very big amount for the customer of this segment and size. So let's say we're going to flag the any transaction which is more than, let's say, 70,000 rupees, so, or 80,000 rupees, right? So I'm just making this up. So this is how the AI is actually taking smart decision, and by saying the statement, right, it looks very normal. Okay, from 50 maybe they'll increase it to 80 or maybe 1 lakh rupees. But if you look at the backend, right, maybe earlier we needed a team of 100 people who are just reviewing this transaction, just because improving it from 50 to a lakh for few customer base. We don't need 100 people, right? It's going to be impacting our overall OPEX. Maybe we need only 85 or 90 people who are going to be doing reviewing the transaction. I'm just making this up, right? So this is how AI is supporting in overall operational excellence as well as the cost efficiency. Even if you look at this market, right, the $30 billion market, right? Um, and still, okay, I'll tell you, because I was part of a lot of incubators also in the region. And we have, and the bank was also providing capital to the new age fintechs, right? So when we are actually okay now, because I was talking about what are the constraints also, right? This, when I'm talking about it in a good way, right, everything is fine, everything we can convert to AI. But we also go deep while we are evaluating the model, right? So I talked about what is the benefit of a model, but I also tell you that the pointers which are key constraint of models, right? So first of all, we always look at when we are building the model that is first of all is the regulatory, right, ask. So when I given the same example of 50,000 rupees and 80,000 rupees, but if a regulator says, if RBI comes to us and say that any transaction at a bank at branch level, if anything is cash of more than 50,000 rupees, you always need to flag us, right? So in those cases, right, we, if this regulatory constraint is there, we will always keep as purview of the laws of the land, as part of what RBI is saying, right? And we'll never let the model decide it, right? We have to have right data parameters which will force feed the model to keep it on the based on the regulatory guidance. Second is also we look at the from customer side, right? So if suppose I'll say any transaction AI gonna block it, right, it can also be turn up that customer convert that as a complaint and say that why I'm getting multiple level of verification, I'm doing this transaction, I'm buying something, right, at a store, but I'm getting this as a blocker. So it should not happen. So you also need to be remember that you should not leave everything on the AI. You should always constrain your regulatory landscape. You should constrain your overall what your customer is looking for, and as well as also the operational parameters. So when talking about operational parameters, that it should not happen that because of something AI is building something, and then because of that, maybe at night at 2 the service stop working, right? Because there's some fraud being triggered, and then AI automatically stop the everything to stop everything to stop, right? This should not happen, right? So we need to be very mindful while we are building the model, and we also need to be mindful about keeping the regulatory, customer, as well as the operational aspect in mind. Okay, let's go to the use cases now. Next slide. Yeah. So okay, so earlier I talked about I'll just touch base on the AI, how AI is using in the credit scoring or alternative data creation, right? Okay, before actually jumping into AI, I'll explain you what it is, right? Those people who don't understand how the credit scoring happens. So whenever, as the retail customer, let's say you are applying for a credit card or you're applying for a personal loan, right? And sometimes the application get rejected, sometimes you're gonna get the application. It's been approved, but if you look at the back end, right, what is the overall logic behind this? What happens is that any financial institution where you're actually applying for banking product, they will call to the bureau, that's a CIBIL. They'll pull your score. So CIBIL is another organization which is building your credit score based on your transactions and your history and your whatever salary you're getting, right? Those sort of parameters, the multiple parameters they use, right, and they build the score. So what do they do is they pull this score, and based on the score, they will figure out that are you eligible for that loan amount what you applied for, or the credit card you applied for, and what should be the interest rate based on the risk profile you're holding, right? So these two things bank will decide. Now the problem is that only the people who are salaried, they are living urban spaces, or which has some sort of bureau visibility. These guys are eligible for credit. But you can see a lot of people who are actually eligible for credit based on what they're earning, but just because it's not been reported to bureau, they are not able to get the right credit card or a personal loan. Let's example gig workers, first time borrowers, right? Even housewives, right? Maybe they are not earning, but they are wealthy, right? I mean, they're definitely going to pay it back, but just because they don't have the right bureau, right, they, if they're applying for a personal loan credit card, they can't get it through. As well as informal economy participants, right? You can see a lot of small stores, right, merchants who are making money much more than maybe a normal salaried person, but just because they are not formally being reported to bureau, they are not eligible for the lending. So here I'm talking about how AI is now gonna be enabling the contextual credit worthiness of a customer. When talking about the credit worthiness, what I'll say is that AI now try to touch base, or to tap on those people who are actually credit worthy, who has the willingness to pay it back. But just because of the legacy system of pulling bureau data and deciding the credit scoring, they are moving much ahead from there and building alternate data score, right? So that's what they call alternate data, right? So what do they do is now they'll say, okay, fine, maybe the person doesn't have a credit sort of history, but customer may be using their mobile phone, customer is maybe transacting through UPIs, those sort of thing, right? So through the payment transaction, through his telco transaction, maybe through his utility transaction, can I build some sort of model? And this model at least tells me that what is his paying pattern. This model gonna tell me that is the customer is paying on time, he's a disciplined customer or not, right? So and when I'm saying, I'm just talking about 3-4 parameters, right? But when actually they're building alternate data model, they can be 500 parameters also. Which pin code you're based in, right? Even suppose you're based in Bombay, right? Which part of the Bombay you're based in. So the multiple parameter goes in, and from there they build the alternative data or alternative data model for a customer who are not creditworthy based on the bureau, but they are actually creditworthy based on their payment transaction. So now AI is supporting in building these sort of intelligent model, which is very tough for any individual or any rule based engine to create in, just because of the unsupervised or else a neural network based model. We are able to get pretty close estimate of a customer creditworthiness once we ingested the data. So that's how AI is now supporting and giving you right the score of those customers who are not a part of the overall plain I'll say credit worthy bureau customer, right? So that's one key use cases, and I've seen this use cases been implemented, executed in multiple part of the world, right? I've seen that Middle East, Europe is doing a well, even some Latin American countries, right? They are doing extremely well, and typically in the credit scoring, typically the fintechs are doing very well there. So in our part of the world, I'll say there are a lot of fintechs are in this space, and everyone talks about what they are doing. But still, I'll say the most of the maturity I've seen in the payment space in India because of the distributed infrastructure, that's UPI. I have seen things doing well here in the wealth space, little bit in insurance space, credit also, but mostly in MSME credit. Personal loans, there are few companies does that, but these are very small ticket size loan, and as well as interest rate are as high as 35%, 40%. So we are still need some more time to get matured to work and on the alternate data models, but still, I mean, we are on the path for that, right? Now okay, so I talked about the good things about credit model, credit scoring. Now what all things which normally evaluator or from a product standpoint we look at while we are building these models. First of all, these models should not have a biased biasness, right? So when talking about biasness, so when actually you're not giving any sort of command and rules to a model, and they may create the model based on the data patterns and all. Sometimes it happens is because you ingested data of some specific segment and parameter, model is more biased towards that particular customer segment, right? So you need to always check on the bias monitoring, right? So when talking about bias monitoring is that you need to see that is my model giving me a pattern of output which is more specific to a specific segment of customer, a specific class of customer, specific income group of customer. So we need to look at the parameter of output in a very close way. So that's one thing. Second thing is, which is also very important about these models, typically I'm talking still about the credit scoring, is that do I have the explainability layer of the output which I'm getting, right? Explainability means that if score for a customer, do I know what is the reason, what is the rationale behind it? Of course, can't be accurate as a head 100%, but even if suppose I'll get 95% close, right? What is the reason I'm getting like X score for this customer or Y score for this customer? This is very important. Otherwise, what's going to happen in future is that once model is very matured and and start giving a wrong output, right, then it's going to be impacting the overall loan book of the bank, or it's going to be impacting into a lot of NPAs. You're gonna, I mean, in a simple word, you start giving credit to the wrong people, right? So biasness, explainability of the layers. And another thing we also need to be keep in mind is, which we lot of not have seen in, I mean, heard about in India, but what I heard in the developed market is that, where the models are very mature and smart, they started overriding human intelligence, right? So talking about overriding human intelligence, it says is that suppose a custom and a bank has given some sort of instruction, high level instruction. Okay, this is the instruction for me, and build a model accordingly, right? So the model has been created, but sometimes they overlook at what the parameters of the instruction has been given, right? Suppose, let's say, talking about regulatory. So when I'm saying, if again I'm making this up, right? Example. So anything more than 50,000 rupees should be flagged in. But when the model says that it's not required, although we said it's part of regulatory, but they say no, it's not required. Unnecessary. We are actually putting this in the exception queue. Let's override this particular rule. So that should not happen. So biasness is something we always check. We also check about the explainability of the model, and we'll check about the overrideness, right? And if even what happened is that, so from outside standpoint, I'll tell you that when earlier I used to see anything is coming up, right? Any company is launching something, right? I thought they build something and launch it, but it's not that easy, right? So if suppose I am launching a new product, or a bank or a fintech is launching a new product, they first need to go to regulator for their approval. And regulator is not that easy. Suppose I'm launching something, I'm launching a new fintech in India. I can't launch it like this, right? I need to go to RBI, I need to take approval on RBI on my PP. That's a product program guide, and I need to be adhere with all the guidances. And that thing itself will take at least few months, right? So regulator, there's a separate team who will go in detail in the tool and the model, what we are doing, how we are doing, right? So every detail level of I'll say scrutiny happens, right? So this like this, right? So and everyone is very careful. Once we have seen that a lot of models have started overriding the human intelligence, or human specific guidelines, right? So model has become little, not in the right control. So post that, these sort of checks are now coming place, right? The regulator is very much aware about that. Okay, next slide. Let's talk about. Okay, fine. Let me also talk about this case study of Halan. So, Halan is, okay, this is the same example, right? So it's typically, if you look at the Egypt market, right, North America, not the North African market. Um, uh, so in Islam, right, the model of paying back to customers is different, and the Islamic banking is also a little different than the normal banking. And because of that, and the whole Middle East and North Africa, we have seen the banks are doing well, and they are still working on the Islamic banking. But now, because they also, as this is a global economy, right? So just because they want to interact with international banks, they want to also have some sort of strong network within the region, not just in a specific country. They are adopting the normal banking, just adopted everywhere else, right? So now the problem used to happen is that the individual, do have scores, but they don't have a very robust score, right? So lending was very, very tough, right? Lending was extremely tough, and because of that, the whole demography was struggling. The new gig work, typical the customers, right? The gig customer was struggling, and there were a lot of expats in the whole Middle Eastern market. They were struggling a lot to take any sort of credit card, personal loan, right? So for that, what Haaland does is they build model. They build model based on the customer need and demand. This model is not based on any sort of bureau data. This is hardcore AI engine, which is typically app based. They look at the payment behavior of customers, and then they will also look at the merchant interactions, right? So I'm talking about merchant interaction is that how a customer is interacting with the merchant, as well as what is the flow an individual merchant also have on the payment side, right? And what was the result is, as you can see that half of the loans are started auto approved, right? So this not going to any individual for actual approval of the credit, or so underwriting happened through the platform, as well as the credit approval also happened through the platform, right? So immediately customer get the personal loan or whatever, looking for the credit card can issued, in the friction of minutes, right? As well as the approval rate of those unscorable, right, users. When talking about unscorable users, is typically which are not part of the actual credit, right, has been improved dramatically, right? Is almost, I'll say, 65% being improved, and the decision time has also been dropped down. So yeah, so these are, you can maybe research about this. This is an amazing fintech, and they did very well. They are also now, I think, raising the next round of capital. So yeah, so you can see examples in India also. I think there was a company called as My Salary, or no, Early Salary. It's been changed to something else. So this company was using the same model, right? So they were pulling data from multiple sources, and they're giving salary loans, double pay sort of loans, and early personal loans, or the interest rates were high, but those people who are not able to get the loans from the NBFCs and banks, they can reach out to these fintech for the loans if they need to be. So yeah, so this is about the AI in credit scoring. Let's go to the other flows also. Yeah, so fraud, this is most interested one for me, because having experience of last 15 years working in financial institution, I've seen, one thing which is pulling a customer to do any sort of a bank relationship with the individual bank is not always the fees or interest rate. It's also about having the trust, and trust can only be built in. So what these are, I mean, trust can only build in when we know that our money with that individual bank is safe, right? So if suppose someone is putting a substantial amount of money in a bank, more than the growth, they'll think that the money should be kept safe, right? So that's very, very important for a bank. Even in fact, the bank has a higher interest rate, or they charge a little more, but to mitigate the risk, individual wants to have the money safe, right? So fraud is very, very important, and I think wherever I'll discuss or interact with any of the decision maker, I always say that there's something you need to deep dive and make it so robust, so that people think that this is the very foolproof bank, this is we can trust on, and this is also going to make a decision of an individual to do banking with the customer. Okay, just give me a second. Just give me a second. So yeah, so now let's deep dive in what fraud decision. I have given you example, right, which has happened to me just a couple of days back. But if I'll talk about now the parameters, right, you can see the verbatim I put in the slide. How the AI is actually controlling the frauds or stopping the frauds. So one thing is, I've seen that it always work on multiple models, right? Typically on the fraud side. So when talking about multiple models, don't always think that we create one model and based on that we trigger the fraud, right? So transaction would happen to me. I'm very much sure what bank did is, so one they must had an AI model which talked about that what is the location or geography from where the transactions happen, right? And what is my current location? That's definitely one level of model, right? Second level of model may be typically on the trigger on the value of the transaction. If this would have been a smaller amount like 10-15,000, I'm pretty much sure that this transaction never come to 2FA, right? Second factor authentication. In the first factor authentication, it should be passed through, right? So this is another I think model which has been integrated. They must also had another model which talking about what was the nature of transaction, right? So if they figure out myself that this person spend money to going to restaurants, or maybe go to the supermarket, or going to the cafes, or let's say airports, right? But if this transaction happened to so the merchant name was also very random, right? So maybe they also triggered the nature of business the merchant does, right? Because all this data the banks has, right? Whenever merchant onboard himself in a bank, they figure out what is the MCC, merchant category code of bank, right, of the customer. So they must have triggered maybe a flag there, and maybe multiple more flags, right? I'm just talking about 3-4, right? And all these different models and rules gonna give them the final output. Let's trigger another level of authentication. And I'm sure if this transaction would have been on a bigger size, right, maybe let's say more than a lakh rupees, I would have got a call also, right? Because sometimes it happens that if you are part of some segment of a customer, right, bank also call you for a large or for a bulk transaction or for a high value transaction, right? So this is how to control the fraud, they are building multiple sort of models and multiple sort of scoring to save customer, to save overall banking landscape and ecosystem. So you can also see in the slide, right, talking about the transaction initiation, how when transaction initiation, right, what level of checks has been happened. Second is real-time scoring engine, right? So when I'm talking about the scoring engine, is that you can see that there are multiples, right? So rule-based engines are there, ML-based engines are there, graphic checks are there, right? So the final scoring of model coming from multiple engines and multiple models, and post that they're going to have some sort of decision making, right? And decision making is happening very, very quick, right? Less than a second. And decision making also goes to multiple levels, right? Based on the risk of the transaction as the customer, multiple level of authentications, and as well as if suppose something is very off hook, they'll also block the transaction, right, before even sending the authentication. So yeah, so this is what the real-time ML use for the fraud detection. Next slide. Okay. Okay, AI for algorithmic trading, right? NLP. Fine. So before actually I'm moving into the algo part, which is a little complex, right, to explain. Let's see. Okay, maybe you guys are already aware about, because you guys are part of this AI session, that normally we categorize these models in three parts: supervised, unsupervised, reinforced, right? These are the major three categories. Of course, they are much more category based on individual how they want to classify that, but these are three key categories. So, and if I want to, from as a layman or as my own experience, if I want to classify this, for me, supervised learning is something which are known to me, right? Any fraud which is known to me is a supervised learning. So I missed that from previous part slide, right? I thought of touch base on this also. So when I'm saying the known fraud, so I know any it can be transaction fraud, it can be a credit card fraud, it can be any fraud which says that if I am doing a same transaction multiple times, or if I'm withdrawing money from ATM, which is a large amount multiple times in a day, right? These are some specific fraud side which keep on happening. You can figure it out based on the data you had, right? But these days, fraudsters are also very, very intelligent, right? They always try to think of new level of frauds, new ways of doing fraud, right? So this particular thing, when you're looking for something which is not part of your, overall fraud book, or the previous frauds, those sort of fraud gonna be spoken in the unsupervised detection, right? When talking about unsupervised detection, says that typically unsupervised learning. So here, unknown frauds, right? So you're keeping your, so the model keep on getting the data from multiple sources, and whenever, based on the neural network algorithms, based on any sort of anomaly and any sort of outliers they find out, they will trigger a fraud. They'll say, okay, fine, this is a fraud which has not been reported previously, but according to the data patterns, according to the trends, we think this is a fraud. Let's let's go to the customer and verify if this is if he's okay with it or not, if he's aware of this or not, right? So there's something which I'll call it unsupervised sort of detection, unsupervised frauds. There's another thing which is which has been implemented now is you are aware about money laundering and organized crime, right? What happens there is that there's a group of account they use, and these accounts are also interlinked, right? When talking interlinked, is that they are sending money from one account, they keep taking from another account, they layered it, and then we send it back to another account, right? So now the earlier lot of people was I'll say the not just the financial institution, but also the countries and organization was trying to look at this problem and seeing that how we can solve it, because they're not able to figure out those transactions which are high in number, from account 1 goes to account 2, from account 2 to 3, then 3 to 1 again, right? So some sort of network or some sort of organized model has been built in, with where the money has been moved, and the regulatory is not able to trace it, and the money is going out from the country, right? Typically the AML cases and other sort of frauds happening typically around in India. Also, you have seen, right, about Nirav Modi case, where he transferred close to 10,000 crore odd from India to overseas. So how to now look at these sort of frauds, which is not very easy to learn it, right? So for that, there's a multiple model, mostly on the graphical analysis side. So what they do is, once they figure out one sort of suspicious transaction, sometimes they don't even create a noise, right? They observe it and then see that, from this particular account, how this interacting with 10 different account, right? So account A is interacting with 10 connected suspicious account, and then they build this called as a network, a fraud network. And once get understand the fraud network, because if suppose they're looking at one transaction, maybe they're saving, let's say, maybe $10,000, but when they're looking for the overall fraud network, maybe there's an opportunity to save maybe $10 million, right? So there's something called as fraud network detection also being introduced at a lot of large scale banks in Europe and in as well as in Latin America and US. But still, the adoption has not been done much. But in see few years, right, the adoption has been at a greater space, and a lot of cases of this AMLs and transferring money from India to overseas is gonna go down. So yeah, so in nutshell, right, a lot of reporting agencies as well as a lot of researchers, they figure out that just because of having a right level of AI model, the fraud has gone down, and then it's safe, typically millions of dollars, for each and every organization, as well as the quantum of fraud is up around, they say 5 to 10% has gone down just because of introducing AI ML, which is still, I'll say at a very nascent stage, but in few years you'll see at a much higher speed and volume, where the fraud gonna get detected at an early stage. Okay, now I'll touch base on the trading side, right? Algorithmic trading. So, okay, if I'll quickly talk about, the overall model, how AI trading system, they don't just only read the price charts anymore. They are actually going in detail and doing and placing the trades, right? So what happens normally trading is that, you're looking at different parameters and trends on the chart. And based on that, you'll make a decision that you should buy or sell a stock, right? So these algo trading models, what do? They go one stage ahead, right? So they're not just looking at the patterns and trends, which is the easier part. They'll also go in a little tougher part, which is actually looking at the earning transcripts of the individual organization. What is the earning every quarter, maybe year, last 5 years? Any sort of new sentiment for that individual, right? Of that, of the corporate, they ingest that with the data sources like, Thomson Reuters, Bloomberg, Factiva, and all. And they also look at the macro sentiments, right? So let's say example, now because of the geopolitical tussle and tariff and trade war, you have seen that some specific country is trying to impose almost 50% tariff, or 500% tariff, sorry, on India on their good shipment or on the exports. So what happens is that, if suppose in my decision making on any specific stock, if I'm just looking at the pattern of how the stock is performing, that's not gonna be give me a more precise way of predicting the future trend of the stock, right? Because if I figure out that a stock which is more specific to, let's say, of something like jewelry, and my 90% of customers are based in US, but if suppose this tariff has been introduced, then maybe it's going to be impacting my revenues a lot. So there are strong chances that the stock get corrected by maybe, let's say, 20%, 25%. So here you can see, right, the algorithmic trading platforms are not just looking at trend; they are looking at the deep insights of about the company. Like they look at the macro part, they're looking at the news sentiment, they're looking at the earning transcript, and then they make a decision. Even there are chances that the rules we have in the trading, right, to how we read the candles. They are sometimes they're going to override those rules to give a decision and prediction which is more aligned to other macro and micro trends than just following the trend, right? That's the reason the algorithmic trading is much more successful than a normal trader. Until unless you have insider news, I think normal trader, I mean, they can't make much money, right? Or you need to be like a Superman. You can't beat the machine, as simple as that, right? That's the reason most of the people who are doing the trading, right, they lose money if they are doing it for a quick sentiments, right? If they are little longer for the trades, then maybe they can make money, but for the quick one it's tough. Maybe once off you can make money, but for long term it's very tough, right? So yeah, so this is about the how AI is used in algorithmic trading, and what are the key use cases for that. Even in fact, I'll give an example, right? So these models are so smart. So one is that you can read the text, you can read the different artifacts or reports which has come out from the company. When talking about NLP, right, natural language processing, these models, AI, the smart model, they are so smart. They can, when they're hearing the tone of let's say CEO, founder, when they're talking about the company, based on the pitch of the tone, they can also figure out that what are the sentiments individuals holding, right? So earning call from where the tone shifts, right? From, let's say, from a confidence to let's say a caution, right? Sometimes NLP model can trigger it and pick this much faster than any human. And based on that, maybe they'll think, okay, fine, the company was doing well. So let's say Reliance say that, their profit has been squeezed in, or maybe just had a 1% profit. Like yesterday, they had their quarter report. So they figure out it's because of the hydrocarbon exports, or taking hydrocarbon from Russia. Maybe they're going to be sanctions, or maybe they're going to be impact on the import of hydrocarbon at a much cheaper price, and they're moving to more expensive place for importing the hydrocarbons, or the crude oil. It's going to be impacting the stock price, right? So with this small trigger, they make a decision that fine, maybe the earlier right price of that stock is, let's say example, 1500 rupees, but now I think with the new sentiments it should be 1450, right? So based on that, the algo started selling. If suppose they're holding any sort of Reliance stock, or if suppose they want to short the stock, they'll do that, right, based on small sentiment. So this is how this is so advanced, not just the text, but also the voice of an individual they ingest in, and based on that they'll take a decision. So yeah, so just reminders that so these system break during so if suppose, give an example, the regime change in Iran right now, right? I mean, it's close to the regime change, and government is very critical. So you have seen that the currency conversion, Iran's currency conversion to USD and to pound to euro, I think it's very minuscule. I think it's close to zero. And why it happens so immediately, right? The moment you'll see the news, it'll trigger to zero, right? Because of the right model in place. Otherwise, it'll take maybe, if not days, maybe in hours, right? But immediately something comes in, and automatically you'll see the money market, and or maybe the currency market is going tailwind, and just because of the these models and output of these from these models. So little, okay, fine. Maybe I'll touch base something more on the NLP side. We still have half an hour more, so I can give you more examples. So for me, the Smarten model is the one. It's not the the Smarten model is not the one who's which has been which has been built in based on the hard facts and rules. The Smarter model is one who's actually first of all ingested a lot of data, structured unstructured data, and which has been tested very well. There is a proper stress testing happened. There should be proper explainability tools in place, as well as it also kill switches, right? We're talking about killing switches. What it means is that that if suppose the output is not very precise, right? they're able to shift to the another way of getting the output, right? So the construct of model gonna get changed. That's also important. So it's not always happen that you ingest data and you get the model which is the best output, right? Even in fact, when we started doing all these AI specific use cases, we have seen the output was extremely low, and that low that people thinking that why we investing such a big amount of money in building these model if the output is so low. But as the model get matured with time, we started getting the better output. Okay, so I think that's on the trading and algo side. Let's look at the investment or maybe robo advisory part. Yeah, next slide. Okay. Okay, so I'll explain you the use cases for typically on the wealth side, right? Wealth front or the advisory front, how AI is enabling the sector. So if you look at a very high level, there are two parts in wealth, right? So one is that you're looking for a goal-based structured investment, right? Typically in mutual fund, you guys think, okay, fine, let's hold this mutual 15 years. This is my retirement planning, or this is my safe bet, right? Or this may be a big purchase like a house or a car. I'm buying this mutual fund. So there's a financial goal attached to it, right? So that's one way, or I'll say one of the approach of the building portfolio on the wealth part. Second is also something called as autopilot investment. So here, individual doesn't have any goal as such. They want to park in their capital somewhere. All they call it risk capital. They say, okay, fine, take this money and optimize it. I am not looking for any sort of goal as such. You are okay to invest in a high risk, high return sort of stocks or the financial instruments. I'm okay with that. But I want the maximum return out of it, right? So one is where you have the goal intact. So maybe the returns are lesser, the risk is also lesser. Some another way, typically on the advisory side, where you'll say, fine, I'm deploying, let's say, a big wealth manager say I'm deploying $1 billion for a hedge fund. For hedge funds, maybe the chances that my return can be as high as 30-35%, but there are also chances when market is not doing well, my capital got a discount, depreciate by 20-25%. But in the the another part where you have goal-based investment, capital also go by 10-12%, and if something goes against headwind, it'll gonna go down by 5-6%, right? So less risk, less return, and another is high risk, high return. So now, if you look at the both users of both of these drivers, how they're using the AI, so there are three things, right? When any large-scale portfolio manager look at, right, while they're gonna deploy money, both, right, either on the goal-based investment or optimization strategy. So first of all, they want to make a proper balance of the capital they're putting in, right? They're not investing capital in one place only. They want to do it in multiple places. Second is they are looking for tax loss harvesting. That means that can I optimize the tax part also a lot. So if suppose someone is investing, let's say 1 lakh rupees, after 3 years that convert to 1.5 lakh rupees, but on the capital gain you have to pay tax, right? How can I invest in those instruments which gonna support me in paying less tax, right? The second thing which they keep in mind, and third thing is mostly on the uh, emotion-free execution. So we're talking about emotion-free execution. What this says is that not time it happens that if you're holding a stock, you are so close to the stock, or you like the company so much, you don't want to sell it, right? Someone likes Indigo so much that even the company is not doing well, just because he has some sort of sentiments attached to it, doesn't want to offboard that stock from his portfolio. But that's not a right decision. So now AI is supporting you in all these 3-4 key part of building your folio, right? So if suppose I'm seeing my investment in silver ETF is good, and I'm deploying all my capital in silver ETF, which can expect me a very good return, but AI may be not able to do that. They will not gonna do that, right? They will also play with the balancing part, right? because if it's growing by 100%, maybe they can also be, it can also get depreciated by 50%, 60% in the next 6 months. So AI is aware about, right? So they always balance the portfolio. That's the one good thing about AI, right? Typically on building the overall portfolio. Second is about, they also keep your overall portfolio in such a way that the return, whatever you're getting, actually coming to your pocket, right? It's not going to the departments paying taxes. Third is they're looking for they'll do some, emotional free, sentiment free sort of, investing, right? So because of these three key models, I'll say that robo advisor platform doing well, but still it's not very, I'll say it's not been adopted a lot, and there are reasons behind it. So let's say example, some extremely high capital, ultra millionaire, right? If they really want to invest in, they'll definitely gonna don't go to a robo advisor. They have a different need, right? They need different sort of wealth planning. Even in fact, I'll say, sometimes these models are also rigged in, right? So if something is of a large scale fintech, these models are foolproof and actually very honest. But a lot of fintechs, right, new age fintechs I've seen, just because getting the right commission, they are when they are building up the overall portfolio, that's a little biased towards some company, right? So because they partner with these models, also partner. I mean, these fintechs also partner with multiple, mutual fund AMCs, or other investment groups, right? So because of the commissioning, because of the fees, right, sometimes the model is biased, right? So that's a problem with the robo advisory typically around the world. However, few fintechs, few banks are doing it well, right? But you always need to keep in check, you do some sort of research when actually you are looking for the investing your money in the robo advisory platforms. Okay, but if I look at the technical part, how AI is enabling it, AI can definitely enable it a lot. It's just about having the right approach in mind while you are actually building the model. And because it's a slow and scalable business, right? I mean, with in advisory business, you'll take time, but with time you're gonna make money. But suppose you want to make money from some first day, it's tough to make. That's why they go to the biasness model, or if they are the portfolio more inclined towards some specific sectors and specific clients. So yeah, this is robo advisory, which we also have seen, a lot of use cases are, currently being explored in a lot of markets. People are starting investing money through robo advisory platforms. So yeah, so this is another important use case. And I think I've covered the multiple, ways of how they are balancing the portfolio. Okay, now let's talk about what the insights we have, right? Typically on the market front. Let's move next slide and then look at the different insights. Next slide. Yeah. So I was asked that we also need to cover something about the landscape, right? And that's 1 year sort of landscape. I put in this figure before also, more than 30 billion, which is the estimated market, which is growing around 22% year on year. I'll now also talk a little about, what are the problems we are facing to scaling up the overall AI in the banking and financial services. So first thing is where we are not doing extremely well is on the infra maturity, right? So if you understand how AI model builds in, right, it's working on your data. I mean, on data, and data is stored in your data warehouses or data lake. It's not about storing data, but also the quality of data, which is important. So a model is gonna take only the clean and neat data. It also needs data which has a holistic population, not one specific segment of data, right? So until unless gonna fix the ingestion layer of the model, that's your data, cleanness of data and holistic nature of the data, you can't have the right outcome out of the model, right? So this is something, which a lot of banks are struggling with, because these are very old bank, 150 years old bank. The problem with these banks are that their IT is very fragmented, right? There you can see maybe 100 different, if you're gonna see the overall IT architecture, maybe 100 different systems. And one system is talking to another system, and how the data is flowing, no one knows about it, right? Even if you talk to the CDO, CIO, they are they're just wondering how information has been flowing in, right? It's very, very complex. So building any model, building a seamless journey which is AI driven as stuff. That's why you're seeing typically on the AI side, right? The fintechs are doing very well because they are the new age setups, right? They have a clean infrastructure in place. Most of the system talk to each other through APIs, microservices. So because of the core strong AI, I mean, sorry, IT backend or data layer, they are able to use the model in a better way, and the model predictions are also much better than any sort of legacy bank, right? So this is something where a lot of banks and financial institutions investing now to clean up their IT backend as well as their overall data warehouses or data storage. So now, if you look at typically on the investment sides, right? So fintechs in the AI, right? So at one point is that okay, I want to build a fintech, and that's specifically working on giving credit, right? Maybe I want to build a fintech on the wealth side, or maybe on the trading side, or maybe on the fraud detection, right? Another way of looking at it, that these segments and sectors are already clear, and a lot of fintechs are in place. How can I differentiate myself, right? So when I'm talking about differentiation, is I now start working on the feature side. When I'm talking about the features, is that what feature fintech A is doing, the fintech B is looking at to have a more enhanced feature. Feature is nothing but so if suppose we'll say that for credit underwriting, right? So one fintech is only looking at credit underwriting. My model say I'll do the credit underwriting also for you, credit decisioning also you, as well as I'll also gonna have building a collection model for you, which has a early warning systems model. So I'm just talking about what are the different things I can give you with my fintech, right? This is gonna be a differentiating factor now. Second is ML operations. So, how strong your machine learning team, how strong your analytics team, who's actually building this model, and keep on enhancing it, right? Do not just build one model. You have to keep on enhancing it, keep on improving it until the precision is as close as 100%, right? Third thing is about the streaming data. And talking about streaming data, is that those days are gone when you have a batch processing of data, and data is coming in bundles. Maybe overnight only you will see the updates of data. If you have that level of details where data is coming after 24 hours, you can't have a strong ML model typically. Let's say example for fraud, right? So in my case, if data hasn't come immediately basis, I would have that the transaction, I would have lost the money. But because the data is ingesting real time or close to real time, the model triggered it, and then they send me a second factor authentication. Streaming of data is extremely important, and so it's like this, right? So AI does not fail because of the math part, right? Not the model building. It is failing more on the plumbing part. So when we call plumbing, right? Plumbing is typically, if you see your house, right? How the water is coming in, right? Through taps, right? And then taps has a proper flow, from one place the water comes in and goes to different rooms, living room, right? How the information is flowing is very, very important. To be neat and clean, there should not be any seepages in the information. So that we're gonna have, and models are already in place, right? A lot of strong algorithmic models being created. It's just about pulling in right data in those models and get the output. So that's something which is more important than actually thinking about what is the right model or wrong model, right? It's about the ingestion of data in the model, which is more important. Okay, let's go to next slide. Yeah, so I talked about these ones, right? So again, I already covered this. If I'll talk about it one more time, what I'll say is that across industry, AI is consistently delivering, and they are delivering typically on the 3 CTQs. When some CTQs that they call it critical to quality, right? So one CTQ is about the speed, how fast the AI gonna make a decision, right? That's one of the key differentiator from human being. Second is scalability, right? So if you give me an annual report of organization, which is maybe 500 pages, I'll take maybe 2 days or 3 days to complete that one, and then maybe I'll pick it later. Here, the AI is so smart, right? They may first time they'll take maybe, let's say half a day to have the proper analysis. Next time you look at it, is scale it up, and then the efficiency improve, maybe few hours. After that, maybe less than an hour, right? So scalability is another factor, right? And then you can have a multiple, maybe single model, but multiple output coming out of that, right? And then I talked about the precision earlier also, right? It's very close to the actual 100% output, right? So even suppose you, when manually people doing work, they always error happen, right? It's a human error. It happens. Let's say example. So I was consulting previously in Bangalore to a large scale investment bank, and I've seen that in that premise where I was, it's almost, I think, 400 to 500 people who are doing almost same work. So they're getting report, and they are pulling some specific data from the report and putting that in Excel, and then they are sending cycle. They build a macro and then they send it across to someone else who's based in US. So that's the work, right? And they are doing this in and out every day. So what they're doing is they are pulling data from there somewhere, and then entering data some in at some other place, and then they reconcile it once they complete, right? This is very, very simple layman work. Now, if you put in right AI model there, right, you can have a much faster speed than human. You can have a more scalable solution, and the precision also going to get improved, with time. So this is how the AI is shaping and turning up the entire, I'll say, space, how the work has been performed globally and as well as in India. Okay, this slide again, if you go to the slide, you can see that what are the efficiencies for credit underwriting. You can see is coming from days to minutes, same is for fraud, wealth, right? So you can go through it later. With the paucity of time, let me compare the slides also. Let's go to next slide. Yeah, touch base on this one. Let me summarize it one more time. So security trends, right? So if you see how the security has changed in the entire landscape, earlier we used to have these passwords, right? So we need to remember the passwords. Still, we do that in most of the cases, but there's always now password coming as an option, right? We have a much smarter way of biometric authentication. It can be through your face ID, it can be through a biometric, it can be through some sort of codes or numbers, right? So this is how your security trends has been changed over the time, which is, and these so face ID authentication is much faster and more reliable than actual password, which you can maybe forget also. Same is for biometric, authentication, right? Your fingerprint and others, right? So this is how things are moving in, as well as another important part of the security trend is also the what I've seen is, as talked about, right? Data streaming. So earlier, what used to happen is that there's always some batch level of data process, right? Either sort of 24 hours batch is going to be, say 6 hours, 2 hours batch. And because of the batch, there was not a proper security applied on the real-time transactions. So if a transaction happen, a fraud happen, it happens, right? There's another way is that if suppose the money is still in the network, you can put it back. Otherwise, there's no other way to stop the transaction. So mostly it's post transaction actions taken, right? But now because of the AI and ML, you can see that just because data streaming happen on the go, we can actually stop the transaction because it's happening a fraud, right? So that's another change I've seen typically in the security side of the trends. Yeah, so and so these are the, I'll say this, and there are many more, right? So you can also see for ultra high net worth individual, there's something called as parameter security touch, right? They give a token, and then the token also has separate number generates every time you open it, right? And then you use it for the transaction, right? So that's what they're saying, that it has a random number generator or something in backend, which is connected with your overall mainframes and or overall backend system. So and it aligns the number, what is generating your token, what is in the backend, and based on that it clears the transaction, right? There are multiple ways. That's what I'm saying. Earlier it used to be a very simple way of putting a password and having the things gonna go. But now, because of the multiple level of authentication, light level of checks and balances happen. Okay, I think we learned a lot about what's happening currently in the AI space, right? We also talked about multiple use cases. Now let's see, what is the overall future outlook of this, right? What future talks about AI, right? So let's go to next slide and we'll talk about the future outlook of AI. Yeah. Okay. So yeah. Um, so what's happening in future, right? I mean, or what people are predicting what's going to happen in future is that. So one is that we will move from the chatbots to a agentic system. When I'm saying chatbots, right? So right now, if you go to any fintech and bank side, you can see there's chatbot there, right? You ask in question, they replied back, or but still, so they are replying it back, but it's not always very usable, right? So if you ask for one question, they give you 10 options, then you go to one of the options, they again give you multiple options. So after 3 4 data entry or inputs, you lost your focus in that, right? And then you want that, can someone actually talk to me and I'll explain them this is the problem I'm facing. That's why chatbots, except in few cases, not been adopted very well around the world. So now from chatbot, what we're gonna see next few years gonna be more of agentic system. When I'm talking about agentic system, is these chatbots are the same chatbot, but its look and feel from outside gonna be look same, but backend is gonna be built for AI. So when I'm saying AI, what they're going to do is they will have the decisioning or the output is not the rule based, it's more of a retrieval based. So the information they have, they retrieve the data and then immediately reply you back. So give an example for my case, if I'll talk about, right, if there's a chatbot from the bank and I immediately say that I had this transaction, they will immediately look at my database and figure out, okay, this is a transaction that happened, this is, and this transaction has been stopped in. So I don't need to talk to the bank and actually ask them to stop the transaction. AI can do it immediately, right? So because they will do and work as similar as what a agent does, right? They understand how agent understand the problem that the bot the chat bot can also do, the agentic system can also do, and they'll take a right decision. So right now what happens, the individual take my call, they understand problem, either he'll solve it by himself or he'll talk to someone else in his team who gonna help me solving that, right? But if AI has all the systems access in place, he can stop the transaction by his own, right? So that's gonna be something you're gonna see in agentic AI. So the call centers volume gonna go down in India and around the world, right? Where the individuals are sitting and doing the work, maybe it's gonna be replaced by agentic systems or agentic bots. You will also see that yeah. So this is what you will also see that it's not about a reciprocal information flow. It's also, you'll see that they will also going to give you triggers. When I'm saying the triggers specifically on the let's say they want to monitor your finances. I have a portfolio in mutual fund, I have portfolio in capital market, I maybe have portfolio in the bond market, right? They look it, and whenever some trigger comes in, they will start giving me the auto alerts on my on my agentic system, or I'll say the chatbot, right? They'll say that this is a new scheme for the specific stock. Let's say talk about Ola stock, right? It's not doing well and you're already holding some sort of stocks. I think it's the right way to right time to dispose it off because of these many reasons, right? So here they are monitoring my finances and giving me decisions. Typically investment side. Same way they can also see that okay, fine, maybe I go for a health checkup and I upload my report, and then based on my report they'll say okay, fine, because you have a, let's say example, high cholesterol, it's better you can also focus on improving your health insurance, right? So see how an individual is supporting me if my what support I'm getting from my, let's say, my financial consultant, my health consultant, or my insurance consultant. It's going to be given by a single entity which is ingesting my data from multiple sources and started supporting me in my life for multiple things, right? So this is going to be the work of agentic system, and that's where we are going. We're still, forget about maturity. I think we are at a very initial stage. But the speed of how the AI is been developing it looks like by 2030 we are quite close to have at least the first level of agentic system in place. So they will monitor finances, they will adjust the risk, they will flag any sort of issues which coming up. And in few cases, maybe if you can give them some sort of freedom, they'll also take proactive decisioning, right? And this where I'll see the finance is going to be heading in. So yeah, so this is the future outlook typically on the AI side. How AI is impacting the overall financial as well as the banking system. Okay, let's go to next slide. Okay, operating model shift, fine. So yeah, I think you guys understand what operating model is, right? So I'll maybe take 1 minute to explain you whoever has, don't have deep understanding about operating model. Then I'll tell you how AI is supporting building a strong operating model. So operating model is something, so how you're gonna run your operations is a part of your operating model. In one pager, is that possible? Can I deploy overall operational flow in such a way that that can be referred in by any individual to understand how the work has been takes place in this organization? If you look at the operating model, wherever you can think it, right? Maybe at a institution level, at a corporate level, NGO level, or at the sovereign entity level, at a government level, right? So the top layer is about the value proposition, right? So value proposition says that what you want to achieve in the operation. Suppose a supply chain company, right? So the value proposition is they want to shift in goods or services from one place to another. If it's a bank, then maybe the value proposition is that they want to fulfill the need of a customer in transaction, in savings, in financial decisioning, in financing, or insuring, right? So that's the value proposition. What you're actually going to deliver to customer, it's your value proposition. That's the first layer of the operating model. Then you're going to have your operations layer, the process layer, right? How things going to be get delivered, right? So if suppose I'm lending to someone, let's say example, right? Someone fill in the form, it come to one person, the person review the information, go to another person who do the underwriting, another person go to decisioning. Then someone will actually transferring money to the customer, and then the collection team who's taking the money back, and then they close the account. This is operating basic of process, right? So second layer of operating model is where how the things are moving in, right? How the process going to be delivered in is part of that. And then you have the technology layer, which talks about what all system you required to fulfilling this process. And then maybe the bottom layer is about the people, how many people you required for executing the work, right? This is the operating model. So you have people layer, you have process layer, you have technology layer, and then you have value proposition layer. Now, AI is now looking at, how we can impact all the 4 layers of the operating model. So at every part, right? So from top layer, when I'll say, okay, this is the value proposition for my customer, but AI say that fine, this is what you're thinking, but this is 3 years, this is a trend which was 3 years back, but the new generation is not looking at the services in this way, right? They're looking at something else, right? So they're going to give me a 4-feet recommendation on my value prop. Same is for operations. So if I'm doing something in some way, and I had maybe, let's say example, 20 people involved in operating that thing, maybe my model says that you don't need to do it in this way. For you, the critical path is this one, and you require 9 people to do that work, right? So I'm saying that operating model is going to get shift based on how you are actually ingested your data, how you're building the models, and how models supporting it, right? So that's how operating model gets shifted. And here the AI forces banks on rethinking how we operate, right? It's not happening on a single day, and they give you all the recommendation and you start working on it. It's a iterative process, right? They keep on telling you, they learn how the operations are taking place. Once you build in the model, they slowly gradually ingesting data, trying to see the patterns, trying to see the anomalies, trying to see the frauds, the risk, right? And then they start telling you, okay, this is the problem here in this particular part, this is the problem in this part, right? So all the transformation consultant who's actually going to any entity and then see what the problem they're facing, maybe the work gonna be go down by 50%, because the AI will gonna support these entities to tell them what the problem is. They don't need any individual to look at the problem and solve it. So this is like how this is how. So what happens is maybe again one more example. Then before I'll shift to the legacy architecture. So earlier, what used to happen is that whatever the process you're creating, you always have maker checker concept, right? So someone do something and someone else is checking it, right? But the help of AI, you don't need that. So compliance checks gonna get redundant maybe after 5 years. Not all of them, but a lot of them. Resilience will be engineered. So resilience is nothing but the risk gonna be engineered. You don't have a documented process. It's gonna be much faster and earlier than that. So yeah, so that's typically how the AI going to be supporting in the operating model shift. Okay, let's move to the next slide. We just have 5 minutes. Let me cover the other one. Yeah, I think I already given the example of the chatbots in detail. What I'll say is that you cannot bolt on some. So it's like this, right? Um, AI gonna use your events, your APIs, and as well as your real-time data to give you a much better decision than your previous chatbot, which is based on the rules, right? So earlier you put some rules and based on that you get the decision, but now the decision is real time based on the right level of API microservices, which are pulling data ingest data from multiple systems. Okay. Yeah. Next slide. Yeah. So this I think already explained what is a modern banking architecture. So whatever the layer of the process, either it's going to be payment, it's going to be fraud, it's going to be interoperability. AI going to be supporting in making things much faster and easier. So banks are shifting from batch-based data to a sort of real-time event-driven architecture. That's something which we are seeing in the modern architecture. They are going to enable more of an instant risk assessment and a seamless payment flow than actually a regressive model where we are retrospectively looking at information and building the risk model, or the payments happening at a more of a batch process than real time. Okay, so this is typically talking about how the modern banking architecture shifting, which is going to be important for supporting the AI and ML utilities and model, right? Okay, next. Yeah, I think yeah, okay, fine. The benefit part, I'll touch base on that. Okay. So for a large scale entity, ROI and impact is very, very important, right? They always look at what is the impact I'm getting, what is my return in the next 3 years, 5 years. Am I able to cover my cost or not? If I am, how much? What is the return I'm getting out of doing this implementation, right? So, and when we are calculating the ROI and impact, we look at, I think, normally 2, 3 matrices. One matrix is about the decision is faster. So if suppose something I'm doing in maybe 2 days, I'm able to do it in one day. What efficiency I'm getting, right, is converting to dollar term. Second is error reduction, right? So earlier I used to have maybe 10% of cases going in exception error. If I'm mitigating that, and then I don't need those people who are working on those errors, right? So that again a benefit for me. Then human effort allocation. So earlier I was putting my people in operational work, they're doing the same work, right? There's no smart work in that. But now, because of AI, I can put these people in the sales work, sales task force. I can use these people for actual interaction with people hand on hand, right? So those level of shifting can happen with the help of AI. So and that's going to be impacting in what is the financial and the non-financial return for me. Okay, next slide. So this is on the strategic outlook and trends, right? So as I explained in last 90 minutes, right, the next wave of AI is not going to be the standalone utilities and model. Is going to be the hardcore platform. So if you've seen 2, 3 decades back, right, how Microsoft has given their PowerPoint, Excel, and Word, and these utilities support in the businesses, the same way co-pilots like Microsoft Copilot, you guys have seen, the same way other companies are working on the Copilot, a big level of platforms. Once these guys introduced in, right, a lot of things what we are doing right now are going to be get mitigated, right? You can have the minutes in couple of seconds. You're going to have the presentation created in a minutes. You're going to have decisioning happening much faster. So what is taking maybe a month sort of time can happen sort of a week because of these sort of large scale platform which is going to be introduced in. Okay, so this is an important part. You guys can look at it in detail. Next slide. Yeah, so path forward is what I'm seeing, what's happening in 2026 is that first of all, you need to definitely align your AI with the regulator. I've seen a lot of banks are they are penalized with regulatory because they are not aligning the AI with the regulation. Second is invest in significant infrastructure. So backend IT tech data layer needs to be extremely good and strong. And third thing is this is not about experiment and use cases. It's more about actually execution. That's the core part of the overall AI strategy. So AI strategy is no longer I'll say optional for any of the financial institution. It's a core part of banking strategy, but you need to keep these three levers in mind. Keep regulatory in check, keep your tech infrastructure in check, and third is looking at the execution, then have this in sort of POCs and experiment. I think I taken 1 minute more than the time I've given. So I'll close now. If you guys have any question, or we can just close the session.
Priyanka, can you please give a formal vote of thanks?
On behalf of the organizing committee, I would like to express our sincere gratitude to our esteemed speaker for delivering such an insightful and thought-provoking session on emerging technologies and use of AI examples from fintech and digital transformation. Your session offered us valuable insights into the latest advancements in AI, fintech, and digital transformations, along with practical examples of how these technologies are reshaping industries and academic research. The clarity, depth, and information that you have shared have greatly enriched our understanding and inspired us to explore innovative solutions in our own work. We sincerely appreciate your time, expertise for making this session very impactful. I'm sure your contribution has significantly enhanced the value of this FDP for all the participants. Thank you, sir.
Thank you, Rohit. Thank you so much.